Internal Revenue Service IRS tax news. IRS urges participants of abusive micro-captive insurance arrangements to exit from arrangements. IR 2021-82, April 9, 2021, Washington. The Internal Revenue Service officials today urged participants in abusive micro-captive insurance arrangements to exit these transactions as soon as possible. So it looks like the IRS has been going into these arrangements more closely. They've been basically litigating in on it, building their case around them, and it looks like it's going in their favor. And so they're basically saying, if you're involved here, our case is getting stronger, and we're looking into it more, so you might want to rethink your position related to them. That's my interpretation in any case. So the IRS has stepped up examinations of these arrangements and has recently won yet another case in U.S. tax court that such arrangements are not eligible for the tax benefits claimed. So they're basically saying here, and this is whenever there's something that's a questionable thing, is it lawful or not? Then of course you can argue that it is lawful, and the IRS can then argue against you, and it looks like the IRS is building their case and building momentum, is winning in these areas, is what they're saying and claiming, and therefore they're feeling stronger if they go into future cases. And so if your position is such that you're in one of these areas, you might want to rethink the position, given the fact that the IRS does look like they're gaining momentum on the topic, and will press further as that happens. So on March 10th, 2021, the U.S. Tax Court held a Caylor Land Dev versus Commissioner TC Memo 2021-30, 2021, that yet another micro-captive arrangement failed to qualify as insurance for federal tax purposes. This decision allows several earlier tax court decisions that also confirm the IRS's determinations that certain micro-captive arrangements were not eligible for claimed federal tax benefits. In the Caylor, the tax court also sustained the IRS's determination of accuracy-related penalties and rejected the taxpayer's claim of reliance on tax advice. So it's sounding like the case, that was argued went in the favor of the IRS here. So again, they're feeling strong because that will strengthen their cases in the future as they have built or are building, precedent on it. So taxpayers who engaged in abusive micro-captive transactions are once again encouraged to consult an independent tax advisor prior to filing their 2020 tax returns. Taxpayers should consider exiting the transaction and not reporting deductions associated with the abusive micro-captive insurance transactions. And I think it's kind of interesting note here that that the IRS, back to the IRS determination of accuracy-related penalties, and rejected the taxpayer's claim of reliance on tax advice. So that often could be a claim that, you might be saying, hey, look, someone advised me, of course, on my tax position, and they were a tax professional. And it looks like, again, the court kind of rejected that. So they rejected the taxpayer's claim of reliance on tax advice. So they're basically saying they're holding the taxpayer responsible, who is, ultimately typically responsible for the tax preparation, even though it's quite complex and you do rely to some degree on an agent. But in any case, keep that in mind. Quote, in multiple cases before the courts, judges have held that these fanciful and unreasonable arrangements don't add up to insurance in the commonly accepted sense, end quote, said IRS Commissioner Chuck Reddick. Quote, I strongly urge participants in these arrangements to get independent legal advice separate from those who helped steer them into these abusive arrangements, end quote. So obviously, if the legal advice that you're getting, just like any kind of advice, it's kind of biased, of course. If their advice is to go into business with them, or, to participate in some type of business, you want to get basically independent. They're saying get independent advice separate from the person who has a vested interest possibly in the arrangement, and that advice then pay them independently for that advice, so that they're not biased in terms of the arrangement itself, and see what they think about it, given the information that's taking place now. So in the past several years, the IRS has ratcheted up its efforts to combat abusive micro-captive insurance arrangements. In 2020, the IRS deployed 12 newly formed micro-captive examination teams. So they're really ratcheting up here. 12 newly formed micro-examination teams, there's a link to those teams here, to substantially increase the examinations of ongoing abusive micro-captive insurance transactions. The IRS will disallow tax benefits from transactions that are determined to be abusive and may also require domestic captives to include a premium payments in income and assert a withholding liability on foreign captives. The IRS will continue to assert penalties as appropriate, including the strict liability penalty that applies to transactions that lack economic substance. In Notice 2016-66, there's a link to that here, the IRS advised that micro-captive insurance transactions have the potential for tax avoidance or evasion. The notice designated transactions that are the same as or substantially similar to transactions that are described in the notice as, quote, transactions of interest, end quote. The notice established reporting requirements for those entering into such transactions on or after November 2nd, 2006, and created disclosure and list maintenance obligations for material advisors. In March and July 2020, IRS issued letters to taxpayers who participated in a Notice 2016-66 transaction alerting them that IRS enforcement activity in this area will be expanding significantly and providing them with the opportunity to tell the IRS if they discontinued their participation in these transactions before the IRS initiates examinations. So they basically tried to say, hey, our positions are changing here. We're getting stronger in our position. You might want to, rethink that or, adjust your positions at this point in time before we do it. Because if we have to enforce it, oftentimes if you take the action first, the proactive action, as time passes, then the penalties and whatnot on the IRS's side could be lessered to some degree. And that's kind of what they're saying here as well. They're saying basically, hey, our position is building. If you're involved in these areas, you might want to rethink your position before we have to rethink it for you, possibly. So you want to get independent advice and see if your position is defensible in that case, and continue on with it from there. So early responses indicate that a significant number of taxpayers who participated in these transactions have exited the transaction.